Hello, I'm Gilles Moik, and I'm co-head of European Economics Research at Deutsche Bank. Today I would like to talk to you about the financial situation of the ECB, all the discussions that we've seen over the last few weeks around the capital of the ECB, the conflict which has arisen between the ECB and the Irish government, and try to understand what could be the consequences of all this onto the ECB's intervention in the market at the beginning of 2011. The ECB last week has requested an increase in its capital base by 5 billion euros. Basically, it will move from 5.7 to 10.7 billion euros gradually over the next 3 years. The ECB went to the maximum it could get without requesting the support from the European Council. Indeed, 10 years ago, the European Council gave to the ECB's Governing Council the possibility to increase its capital base without having to request it from the European partners. The European partners are obliged to participate to this capital increase as long as it was in the boundaries of 5 billion euros. So this is exactly what the ECB has targeted. Why are they requesting this increase in the capital? There were two ways to read this in the market. There was a kind of positive, optimistic way and a more cautious way. The optimistic way was basically to say the ECB has to intervene more and more on the market, especially on the peripheral government bond market. And to do that, it has to be protected. It has to be protected against the possibilities of losses or haircuts down the road if any of these countries is restructured. So it was seen as a prelude to massive intervention by the ECB. Actually, we don't think this is the right interpretation, and we stick to the second and more prudent interpretation, according to which the ECB is actually already stressed about the level of risk it has already taken on its balance sheet, and this recapitalization cater for the past increase in exposure rather than anticipating any further increase in ECB intervention. Indeed, if we take into account the money which has been lent by the ECB to banks in the peripherals, plus what has been purchased in terms of govies on the secondary market, we've got something which is already 5.5 times the entire size of the euro system capital and reserves. So there's a need to protect the ECB and generally speaking the euro system against this. However, as I've just mentioned, the issue is not really the ECB's capital. The issue is the Eurosystem capital. Because contrary to a very popular misconception in the market, the ECB's interventions are not do not stay on its balance sheet, are not focused or concentrated on its balance sheet. The purchases of govies through the SMP program, lending to banks, is actually distributed across the whole Eurosystem, meaning on the ECB's balance sheet, but also on each national central bank's balance sheet, which means that if we want to protect in a significant manner the Eurosystem against the possible consequences of its exposure to risky assets, what we need to see, beyond recapitalizing the ECB itself, is a recapitalization of the whole Eurosystem, which means that every single government in the Eurosystem needs to beef up the capital and reserves of its own national central bank. We've already started to see this in France, for instance, where the Banque de France has already announced its intention to triple its capital and reserve base. That we will probably see this spreading throughout the Eurozone. Lastly, from a more political point of view, what we think this move from the ECB and possibly from national central banks reflect is that this is a strong signal that counting on the ECB to do the right thing and to fight the euro crisis on its own strength is not going to be a free lunch. That this is going to cost national governments some money because they will have to beef up to increase the buffers of their national central banks or of the ECB, and this will cost them money because they will probably have to renounce on the dividends, which are sometimes important, that those national central banks finally pay into the state coffers. So from the euro system, it's a way to tell national governments, whether you like it or not, you will have to participate more importantly into the funding of the euro rescue. For the governments which are currently reluctant, for instance, to increase the size of their participation in the EFSF, what the ECB is saying is that you may save money by not increasing the size of the EFSF, but if that means that the central bank has to pick the tab, this will have to be paid up by the national governments in the last instance. So, in a nutshell, what we're seeing around these decisions is both a willingness from the ECB to protect itself and a signal sent to the national governments to increase their participation to the rescue of the euro system.